Yes, a really good afternoon to you all and welcome to the next session on the agenda. So over the next half an hour, myself and Eleni will be talking through the European gas and LNG market outlook in 2023. But before we do, it's worth taking a check-in with the market following that significant reduction in Russian pipeline gas flows to Europe last year. So if we take a look at the next slide and focus our attention on the top chart, here you can see just how much Russian pipeline gas flow was lost to the EU in 2022, and it amounted to around 64 BCM of gas. Now, to put that figure into perspective, that's around 800 cargoes of LNG or 16% of EU gas demand in a typical year. So this was a significant loss in flows to Europe. How did Europe respond to this? Well, European TTF prices surged to all-time record highs in order to destroy gas demand, but also to incentivize additional gas flow to the continent. And you can see in the bottom chart there that TTF prices rose to an all-time record high of $100 per MMBTU in August when Gazprom announced that it would not be flowing any more gas through the Nord Stream 1 pipeline. Now, for those of you in the oil world, $100 per MMBTU is equivalent to $550 per barrel. So this was incredibly expensive for Europe. Thankfully, though, the record high prices didn't last for long because Europe was able to restock its gas inventories ahead of winter. And that was largely thanks to demand destruction in the market, particularly from the industrial side. So we saw plants shutting down or curtailing production due to the high gas price environment. But we also saw a significant rerouting of LNG flows to Europe as TTF became the premium market for spot LNG cargoes. Now, if we fast forward to today, you can see that Europe is in a bit more of a balanced environment, and we see TTF prices trading at around $15 per MMBTU at the moment. Now, this is because Europe has had quite a mild winter so far, so we've made savings on the heating demand side, but we've also continued to see strong LNG flow to Europe and industrial demand destruction. Now, assuming that we don't have a beast from the east scenario play out, and hopefully we don't, we think that European gas storages could end winter at 50% full. And that's around 18 BCM that we'd usually see around this time of year. So Europe is sitting in quite a good position at the moment, considering all of those worst case scenarios that could have played out and what we heard about in the market last year. However, Europe now needs to start thinking about restocking and getting through another winter with limited Russian pipeline gas flow. Add on top of that, we could have China coming back into the market this year. So certainly we need to not be too complacent at this moment in time because there are still a lot of market uncertainties that the market could face. So let's start thinking about this year and what could happen with the LNG balance. And Kpler thinks that LNG supply could grow by around 19 million tonnes this year, or 4.7%. Now, we see the main growth story coming from the United States, and that's not because of new capacity coming online. We don't see any new capacity coming online in the US this year, but it's due to the restart of Freeport LNG, which is currently undergoing a restart at the moment following a fire that occurred in June of last year and took the plant completely offline. On top of that, we have an additional 3 million tonnes of LNG supply coming from the fact that the Kpler Pass, which is a new plant which started production at the start of last year, will be running at full capacity. So around 5.6 million tonnes coming from Freeport and 3 million tonnes coming from Kpler Pass. Now, other growth stories on the LNG supply side are Mozambique, which started the Coral South FLNG in November of last year. And we also have a full year of the Norwegian LNG plant after its restart in June. We also expect additional LNG supply from the likes of Egypt, Trinidad and Nigeria, all due to expectations of improved feed gas supply. Now, on the LNG export capacity side, we don't see much additional new capacity coming online this year, and it's really limited to Indonesia's Tangguh Train 3, which has faced many years of delays, and we think could start up first LNG production in the second quarter of this year. We also see the potential for Senegal and Mauritania to come to the market for the first time this year, and they could start up their plant in the second half of this year. Now, with many forecasts, there are a lot of supply uncertainties, and we see the biggest uncertainties as being unplanned maintenances, as we saw with Freeport LNG unexpectedly coming offline last year in June. We also see the potential for more maintenance in the market this year after many plants really pushed their production last year to meet the record high prices. So this is certainly something that we need to be aware of as a downside risk to our forecast. Now, that's the LNG supply side. Now let's cover the demand side, and we're going to focus on the key demand hub of Asia. Now, Asia reduced its demand by about 19 million tonnes last year, and around 15 million tonnes of that came from China due to the high gas price environment, but also the lockdowns. Now, our forecasts currently show that we expect Asian demand to return this year, but to remain below 2021 levels. And the key question in the market is to what extent will China come back into the market this year? Now, we think that China could buy an additional 6.3 million tonnes of LNG this year, bringing their total demand to 70.5 million tonnes. And this is due to new contracts coming into force, but also, of course, the reopening of the economy. Now, we aren't seeing too much activity from the Chinese at the moment, and we are very cautious about the near-term outlook, but we do see LNG demand growth returning in the second quarter and speeding up through the second half of the year. So this is certainly when we could start seeing more competition with Europe from the third quarter onwards. Now, elsewhere, we expect further gains coming from the likes of South Asia and Southeast Asia, particularly the likes of Thailand, which is struggling with its domestic gas production at the moment. And we've seen PTT in the market buying many spot cargoes. We also expect additional demand from more of the price-sensitive buyers in the market, the likes of India and Pakistan, which have returned to the spot market in recent months. But it's not a rosy picture all round, and we see some declines coming from the likes of Japan and South Korea due to stronger nuclear production, coal-fired capacity coming online in South Korea, and high stocks in Japan due to a very mild winter. Now, if we take together the LNG supply forecast and the demand forecast, we see the potential for Europe to take in an additional 14 million tonnes of LNG this year, which takes their growth level to around 11%. Now, that's much slower than the 60% growth that we saw last year. Now, of course, we have additional supply in the market, as I've said, with the United States bringing on more supply, but we do need to be aware that Asia is stepping back into the market, with China being the biggest risk. Now, last year we saw many bottlenecks on the LNG import side in Europe, but we see those being alleviated this year. So we've had a number of FSRUs coming online over the last couple of months in the Netherlands, in Finland, and in Germany. And we see the potential for FSRUs to come online this year from the likes of Italy, Germany, Greece, and also France.